somebody asks you how do you keep making money as a mortgage broker in this environment, what do you say?
I mean, there's still plenty of. First off, real estate, like we said earlier, real estate is still pretty solid. You even told me this the other day. How many houses were bought in 2008, in the middle of the crash?
There was over $4 billion
in volume.
Yeah,
$4 billion.
I think $4 billion or 3 point something billion
in volume, done in 2008, in the middle of a crash. This isn't even that. This is going into a possible recession with a strong housing market.
This is going into a possible recession that is going to, in 2023, rates are going to come back down. So every person you put into their home, you're going to refinance.
Absolutely.
So you're going to essentially double your production year over year.
Yes.
Crazy.
Yes. It's a short-term, high interest rates are a short-term problem.
Extremely short-term. I am so comfortable with that. It's crazy.
Yeah.
I don't think people are comfortable. I'm getting messages right now, dude, because of
they're not.
They are not comfortable with it.
I mean, and that's what I was talking about earlier in terms of speculation and comparing to 2008. And people are seeing this and panicking. They're not realizing how different it is, because the guidelines in loans right now are all good loans, and everyone's saying, oh, like you have all these riskier loans, like bank statement loans, 1099 loans. They're performing even better than normal conventional
Most
loans.
credit scores have to be like 680 on those.
Yeah.
So for you that don't know, who might just be watching this saying, oh, 680, that's terrible. 680 is a pretty strong credit score.
Correct. Conventional goes 620.
Yeah. And then
FHA goes 500.
With approved eligible.
Yes.
Yeah, I mean, bonkers. Is that the word for it?
I would say that.
Bonkers. This is a great industry. I love it.
Yes, it is great. But, yeah.
But what? Don't leave me hanging here. That's very suspenseful.
That's what
My question to you that you didn't answer was this. If you were going to give a young, in the industry less than 2 years, loan officer who got in while it was shooting fish in the barrel and they were making all this money, advice on how you make it in this industry during these time periods, what would you tell them?
How did I not answer that when you never asked it?
I said, what would you tell people in this industry to survive during these times? Same question, just worded differently.
Okay, fair enough. I mean, what, for loan officers? Or for clients?
Originators.
For realtors? Or originators?
People who do what we do.
Okay.
How would they survive right now? What should they do to survive right now?
I mean, right now you have a large diversity of products. You have HELOCs that are coming back around. You have ways to help your clients. And I would focus on that and focus on actually the client, not just a transaction. You're not going to go out there and get a bunch of easy refinances. It's not going to happen. But if you actually go out there, focus on the client, listen to their goals, work with them, find a great situation for them, people are still buying homes.
How do you get the client, though? Because a lot of them, year and a half in, they don't really have a lot of clients. They had people who that they saw on Facebook that came to them and refinanced. How do they get the client?
By working, by calling realtors, by calling attorneys, by networking.
Networking.
By showing everyone what you can do, what value you can provide.
I'm 100% on the same page with that. Because how many applications have we had in 2 weeks? I just looked.
I think we're at 15?
15. We just
14?
got
15?
17.
Oh.
We just got 2 more. Yeah. 2 more, and we didn't call anybody today because we were organizing.
Yes.
Right? 17 applications, and every one of them people over the next 3 months, probably 75 to 80% of them who send an application will get into a home and close within the next 90 days.
Yes.
We're building a pipeline every week because we call, how many realtors do we call?
400 to 500 a week.
So we're talking to that many realtors, telling them the value we provide. And our value might be a little bit different because we have underwriting backgrounds.
Absolutely.
We can do a little bit more. We pre-underwrite self-employed.
We're brokers with a ton of products. We're not retail bankers with the...
100%. So when I was on the wholesale lending side, right, and I was an AE and we hit higher interest rate markets, you know what I wanted to be? An AE at a place that had more products, a bigger product bucket, because I can do more, which means I can actually still increase the amount of money I'm making by helping people because I have more ways to help people.
Yes. And I have been asked this actually several times too, because people, they hear about the non-QM products, these non-conventional products, and they start panicking. They just go to, oh, this is subprime again. It's not. You are looking at it. It's a different way to calculate income. You look at like 1099 bank statements and like an investor DSCR loans, investor cash flow loans.
Yep.
What those are doing, that's just a different way to calculate it. It's just moving the risk around, but it's still looking at them as a qualified buyer.
Right.
It's still weighing the risks. It's still looking and say, can these people afford the payment? Like a DSCR loan, for example, is a good idea because there's not many docs on those, right? And everyone's go, oh, wow, how can I get a loan like this? But it analyzes your credit. It says they have a great credit history. They own their primary residence with a clean history, meaning they're in a good financial position now. Exactly. You have assets for the down payment and for reserves. And then you get the actual 1007, the rent schedule for the investment property that you're purchasing, showing, wow, this is going to rent for more than they're paying. They're going to be even in an even better financial position.
Yes.
We have someone whose history shows they are qualified, and now they're even improving that. Why do we need to ask about their job? Why do we need to ask about all this and that?
We don't.
Exactly. This is not saying, oh, we're just going to throw out a mortgage just because.
Yeah. And let's touch on that. That's called the debt service cover ratio loan, DSCR.
Yeah.
Let's touch on that. Credit score has to be higher than on a normal conventional.
Correct. You need more reserves.
Need more reserves. A lot of them, if you don't have landlord history, you can't do them.
Correct.
If you don't have landlord history, there are a few lenders that will allow you to do them, but your credit score has to be in the 700s.
Correct.
You have to have you have to be in a primary residence, own a primary residence, have perfect payment history. You can never have had a late, ever. Like
show that you are in a great financial position with your credit.
100%.
And that this transaction will only improve that. So what can go, like it's common sense.
Yeah. And then let's look at businesses, right?
Yeah.
Businesses have a lot of depreciation write-offs, have a lot of this write-offs, have a lot of that write-offs. You do. But they have a lot of write-offs is what I was getting at.
Correct. And they have a lot of write-offs based off of what's going on that year and what they can afford. If it comes down to, you're not going to have certain expenses if it comes down to your business making it or not.
Right.
And you making it in terms of paying your mortgage. You're just not.
Mm-hmm.
So, and that's why, and actually self-employed clients right now are the leading, self-employed income is the leading cause for declines right now, because you're having so many different individuals that are now self-employed too because of COVID.
1099, gig economy.
Absolutely.
There's a major shift. There's a worker movement in this country that nobody's talking about, that they're leaving their jobs and they're going to do what they're doing, but they're doing it on 1099 and making more money.
They're doing Uber on the side, 1099 job. They're doing things like that.
Making more money.
Yes.
Figuring out a way to make more money.
Absolutely. On their own time. Well, yeah.
100%.
And guess what? They're having trouble qualifying because of write-offs. What does bank statement and 1099 loans do? Basically, it estimates, hey, you're making a 1099 in this industry. What are your expenses going to be? Let's actually estimate a reasonable expense, put that in instead of looking at all these write-offs that the government allows that people take advantage of, because there's a lot of good CPAs out there.
Very good.
Yes.
They're not doing anything illegal. They're taking advantage of tax law.
They're not. Exactly. They know how to work the system.
I don't know if you know, but taxes are unconstitutional. But anyways, keep going.
But then the bank statement loans, you actually take a look at the bank statements. You look at the money coming in for at least a full 12 or 24 months. There's a rate difference between the two. But you're looking at that and saying, wow, this business has gotten in $2 million in business deposits over the last 12 months. This guy can pay a mortgage.